Welcome back, everyone. Today, we are taking a detailed look at gold on the H4 time frame, and the current market structure is giving us some very important signals. Okay, let's starting with the bearish descending trend line. Looking at the chart, we can clearly see a long-standing bearish descending trend line. This trend line connected multiple lower highs and acted as dynamic resistance throughout the previous bearish structure. For a significant period of time, gold remained below this trend line. Every major recovery toward the line faced selling pressure, which kept the broader market structure bearish. However, the situation has now changed. Gold has successfully moved above this bearish descending trend line, and the breakout came with strong bullish momentum. This is an important technical development because it suggests that the previous bearish pressure is weakening while buyers are gaining more control. The important point here is that we're not simply looking at a small intraday move. We're looking at a breakout from a much larger H4 structure. If gold continues to hold above this broken trend line and keeps forming higher highs and higher lows, it would provide stronger confirmation that the market is transitioning into a bullish phase. Now, let's move to the next important area, discounted price zone. At the lower part of the chart, we can see the discounted price zone located approximately between 3,938 and 3,965. This area is important because gold previously found strong buying interest around these lower levels. Whenever price entered this region, buyers stepped in and created significant bullish reactions. Eventually, this buying pressure helped gold recover and move substantially higher. Gold has already moved a considerable distance away from this discounted area, so chasing the market at the current levels carries more risk than waiting for a controlled pullback. Support zone. The major support zone on this chart is located approximately between 4,200 and 4,302. This area is extremely important because it sits directly below the current market price, and it can potentially act as the main support during any short-term correction. After gold moved higher, this region became an important structural area. If price pulls back toward 4,302, we want to see whether buyers step in and defend this level. A deeper move toward 4,200 would be more significant because this is the lower boundary of the major support structure. As long as gold remains above this zone, the broader bullish recovery remains technically valid. So for now, 4,200 to 4,302 is the key support area that traders should keep on their radar. Now let's move to the most important upside area. Resistance zone gold is currently approaching the major resistance zone around 4,364 to 4,384. This is an important area because it can determine whether the current bullish momentum continues or whether the market needs a temporary correction. After such a strong rally, it would be completely normal to see some profit taking around resistance. So traders should not simply assume that price will break higher immediately. What we want to see is a strong H4 candle close above the 4,384 level. If that happens, followed by a successful retest, the breakout would become much more convincing. On the other hand, if gold gets rejected from the 4,364 to 4,384 resistance zone, we could see a pullback toward 4,302 and potentially toward the 4,200 support area. That is why confirmation is extremely important at this stage. Now, let's talk about the long-term picture. Long-term targets. If gold successfully breaks above the 4,364 to 4,384 resistance zone and continues to hold above this area, the next major upside targets come into focus. The first long-term target shown on the chart is around 4,551. Above that, we have the larger target near 4,591. These targets become more relevant if the current bullish structure continues and gold maintains strong momentum above the major resistance area. So putting everything together, the technical picture is quite clear. Gold has broken above its bearish descending trend line, showing a potential shift in the broader market structure. So, at this point, patience is extremely important. Don't chase the market after a strong rally. Instead, watch how gold reacts around the key resistance and support levels. Overall, the higher time frame structure remains constructive while gold holds above the major support zone. We'll continue to monitor the reaction around 4,364 to 4,384 because that area could determine the next major move. Thank you for watching. If you found this analysis helpful, make sure to like the video, subscribe to the channel, and turn on notifications so you don't miss the next gold market update. Now let's move to the next EuroUSD analysis. EuroUSD is currently trading around the 1.1558 area, and the H1 chart is showing a constructive bullish structure. First, we have the ascending support trend line. This trend line has been connecting a series of higher lows, showing that buyers are gradually stepping in at higher levels. As long as price continues to respect this trend line, the short-term bullish structure remains intact. Now let's look at the support zone, positioned around 1.15516 to 1.15571. Price is currently holding above this area, making it an important level for the next move. A successful retest and bullish reaction from this zone could provide further upside momentum. On the upside, the key resistance zone is located between 1.16168 and 1.16223. This is the major level EuroUSD needs to break for a stronger bullish continuation. If price breaks and holds above 1.16223, the bullish structure could extend further. For now, the bias remains bullish as long as EUR/USD holds above the key support zone and respects the ascending trend line. Confirmation around these levels will be important for the next major move. This analysis is for educational purposes only, and it is not financial advice.